Hey, how's it going, guys? Thank you for joining me on this week's episode of The Real Deal. Hope you guys are having a great Friday. From what I heard, this is going to be the coolest, and I say coolest because it's still hot as heck out there, Friday for a couple weeks. So enjoy it. Go out there, go to the lake, have some good time before it gets real, real hot. I know. I thought it was like we were there. No, I looked at the weather report because we're doing a lot of these outdoor activities, and actually tomorrow's going to be pretty pleasant. So, what are we talking about today? We're talking about mortgage forbearance, and of course, if you ended up doing a mortgage forbearance. This isn't going to apply to you if you don't own a home. Obviously, this is only if you currently own a home, or share this video with anybody that owns a home currently and they went through this process, right? So, this applies. This isn't specific to what was going on with the COVID stuff, but obviously, there was a big influx of people that ended up going and doing mortgage forbearance during these times. And if that option was exercised and you had to go down that route, obviously that meant that you're going through some tough times, and hopefully you're out of those tough times by now. But let's fast forward. Let's say you're ready to buy a house. Let's say that you were in a mortgage forbearance and you're like, hey, I'm ready to go. I want to buy a house. And you're either going to rent that house that you have or you're going to sell that house. If you're going to do this in the short term, it's going to be an issue for you. There's going to be a couple additional steps for you to try to get into your next home or next investment. So I'll give you guys a scenario. I have a colleague of mine that is in the process of helping a client out purchase a house, and this client is moving in from out of state. From the previous state that they lived in, they had a mortgage forbearance, and they're going to try to rent the house that they live in or lived in out there, come and buy a house out here. Here's the problem, though. They had about 3 or 4 months that they were in forbearance, and unfortunately, now they're in a situation where they had to go through they got to jump through a lot of different steps to try to get their new mortgage. So most lenders, they don't want to see active forbearance on your mortgage to help you finance a new mortgage. So there is steps and there is ways to get around that. And obviously, I'm just going to give you guys a quick snippet of this particular example. But if that is something that you're going through, you have a house, you're currently in mortgage forbearance, you've been thinking about renting that house and buying something else, or you've been thinking about selling the house even and buying something else, here are some of the steps that you're going to need to take. That forbearance is definitely going to have to go away, so you're going to have to reinitiate your payment plan if you're going to stay with the house. Now, in some cases, and this is going to be lender specific, the lender can ask for those 3, 4, 5, 6 months that you previously paid to get current. And that's obviously going to be the tougher side of things, right? So that isn't as common, but it is a possibility that your mortgage provider, your mortgage servicer might call those 3 or 4, 6 months current in order to not show any missed payments. Because sometimes if the mortgage provider is going to reflect those on your credit profile as missed payments, the new mortgage will not work. You have to make sure that you have consistent payments for at least 12 months for the most part. So there is going to be certain loopholes that you have to jump through in order to get ready in the position to be able to buy a house again. And yeah, your credit score might not have been impacted. It shouldn't have been impacted. However, when the lender pulls your application and they see these gaps in payments, that's still going to be something that's going to affect you. So in this particular case, somebody that owns a home and wants to rent that house out and they're in the process of wanting to buy another home, it gets a little bit difficult because you don't have the proceeds from selling the house to pay off those months. So you're going to have to take additional steps, get letters from the lender indicating that you're back to your payment plan, that you're back to your normal scheduled payments, and hope that they don't reflect those missing payments and your account reflects as current. That is a possibility. The lenders that I work with are able to do a rapid rescore, meaning that as long as the documentation is provided and they can force the credit bureaus to report that, then you should be in good shape. But just think about all those additional steps that you have to take to get there. So just make sure that you prepare ahead of that. Now, on the flip side, if you're currently in mortgage forbearance and you're selling your house to purchase your next house, which is a little bit more common, that's most of the time the route that people take, then at that point, those monthly payments or those months that you missed are going to be paid off essentially because you're now going to pay your mortgage. So those monthly payments, I did a video on this a couple months ago. They never went away. They were just added to the back of your loan. So when you pay off your mortgage, those end up getting paid through the proceeds of your house. However, you're still going to have to follow the same steps as somebody that's just going to rent their house out. You still have to get that credit profile to update as current. You still have to get that credit profile to update as something that never really happened. And it is possible, but it's just going to be on a case-by-case basis. Where that does add a wrench, or it adds a little bit of complexity to the issue, is if you're in the process of selling and then you now need to buy, and we need that credit profile to reflect current, we need those mortgage payments to reflect current, then you're going to be in a situation where you might need to rent a short-term 1 to 3 month house or Airbnb, so that way you can have that clear off your credit by the time that you move into the new house. So it's just going to add a little bit more difficulty to that process if you are currently going through that process right now of selling and buying. It is possible to do it in one fall swoop. It's possible to do it all at once. However, the seller that you're buying a house from has to be okay with the longer closing. Which obviously makes it a little bit difficult for you to get your offer accepted as well. So as you can tell, just on some of these real kind of basic things that we're talking about right now, it sounds very confusing and complicated, and it can absolutely be. So if you are currently in mortgage forbearance and you've been thinking about buying a house, or you've been thinking about renting your house and buying something else, or you know somebody that's going through that process, get all your answers now, submit your application, find out what you need to do, find out what you can do to get things in motion sooner, so that way when you are ready to start shopping for your home, this isn't holding you back. Because that's the worst feeling. You're ready, you get hyped up, you got your score up, you got this, and you got everything lined up, and they hit you with this, this whole ordeal. Okay. So hopefully that helps you out. And like I said, obviously, if you went through this mortgage forbearance, it was because you were going through some tough times, and hopefully you're back to normal. Everything's good. Income's solid. While we're on that subject, that has come up, clients that were in the process of buying a house and they were laid off temporarily or even forced to get new jobs. As long as you're back to work and we can complete 2 years of job history, you're going to be okay to buy a house. That lapse in employment isn't, and it shouldn't affect you. I can't guarantee that it won't, but it shouldn't affect you depending on the type of pay that you make. Okay, so even though you took some time off of work, and if you ended up getting laid off or switching jobs, it doesn't mean that you had to start all over. That's a big misconception. A lot of people think they need to be at the same job for 2 years. Okay, so there is definitely that's not a big deal. That's an easy fix. As long as you're back to work, we should be able to just pick up where you left off. Cool. So that's it for today's episode, guys, of The Real Deal. Hopefully this helps. Please share this video with anybody that you can think of that needs it, that's going through this, and will be potentially purchasing a house down the road. You guys have a great one. Enjoy your weekend and stay safe.